What's up, guys? Welcome to HDA Forex Empire. Now, in today's video, I'm going to talk about market structure. I will take my time to break down what market structure is to you guys for you to understand, and I'll make everything simple and basic for you guys to understand. Now, you should note that market structure is the basic and the fundamentals of forex trading or technical analysis. And in order for you to be a good trader, you have to know market structure. You have to know about market structure. So if you haven't subscribed, do well to subscribe to the channel and turn on the notification bell to stay updated with every video and educational content I drop. See you. When we talk about market structure simply means that the overall behavior or pattern of price movement in the market. So it's very simple. So it's the overall behavior, how the market is behaving, how price is behaving in the market. And now in the market structure, whenever you open your chart, you should first know the market structure for that particular currency pair. So now for market structure, now the market can either be trending or not trending. And if the market is trending, the market is either moving in an uptrend or a downtrend. If the market is trending, so I'm going over it again. If the market is trending, it's either moving in an uptrend or a downtrend. So it's very simple and basic. And I'll take my time to explain each of them, and I'll explain it on a real chart also for you to understand. We also look at examples. And now when the market is not trending, we call that as a ranging market or a consolidating market. So I'll take my time to explain each and every one of them to you. First of all, start with a trending market, and under a trending market, we first look at an uptrend. Like I said, the market is either trending upwards or trending downwards. So we'd like to look at an uptrend market. So now I want you to think of the market or price moving in a wave-like form. I hope you know how a wave looks like. So a wave-like form, I want you to think of the market moving in a wave-like form. Now, if you notice something, you notice that whenever you open your chart, whenever price is in an uptrend, price doesn't just move upward from one point to another point. I hope you are getting it. So the market moves in a wave-like form. I hope you are getting it. So now this is how it moves. So starting from this point here, you notice that the market moves upward like this. So now this move is called an impulsive move. That move is called an impulsive move. Then you see the market coming down again. So you see the market coming down to a point here or any point. You see it coming down. Now that downward movement is called a retracement or a correctional move. So it's very simple. Then you see another move upward. So that move, like I said, is an impulsive move. So what the impulsive move does is that it breaks this point here, so it moves above this point here, this pointed area here. So you notice that it's moved upward like this. Then we see another retracement move or a correctional move. Then you see another impulsive move. Like I said, always the impulsive move breaks this point here. So it's very simple. So this is how the market moves: the impulsive move, then the retracement move, then another impulsive move. So it's very simple to understand. Very simple to understand. So it's not any difficult thing. Just understand this, that the market moves in an impulsive move and a retracement move. So as you can see, this is an uptrend market. So now that we've spoken a bit about an uptrend, now we have to note that an uptrend also has series of higher highs and higher lows. So now if you look on my chart, you could see that I've represented some points with some letters, which is HH and HL. So you see that I have something like HL here, then HH over here. So now an uptrend has series of higher highs and higher lows. So now I'm going to show you this series of higher highs and higher lows. So now if you look at this point here, you notice that this point, I have indicated that point as a higher high, and also indicated this point as a higher high, and indicated this point as a higher high, which I've represented with HH. So all those points are known as higher highs. And if you look at this point here also, I've indicated here with H here, which is known as a higher low, and I've indicated this point here, which is known as a higher low. So now if you notice something about an uptrend, it has a series of higher highs and higher lows. So that's one of the characteristics of an uptrend market. And one thing you should note about an uptrend market is that whenever the market is in an uptrend, you should know that buyers are in control of the market, meaning that traders are pushing prices up. That's why it's called an uptrend market, because traders are pushing the price of an asset or a currency pair upward. That's why it's called an uptrend market. I hope you are getting me. So it's very, very simple. And whenever the market is in an uptrend, what we do as traders is that we look for only buying opportunities. So in an uptrend market, we tend to buy in the market. We don't do any other thing than buying. We don't sell in an uptrend. We always buy in an uptrend. So you should keep that at your fingertips. Very, very simple. So we'll go ahead to look at real chart examples of how uptrend looks like. This is a real chart, and we are going to look at an uptrend on a real chart. So now whenever you open your trading view chart, this is how your chart is going to look like. It's going to look normal like this. So now whenever you open your chart and you want to know the trend of the market, one thing you should always do is to zoom out your chart. So you have to zoom out your chart so that it looks like this. So now when you zoom out your chart, you tend to get a clearer picture of the market. I hope you are seeing that. So you notice that now in this scenario here, you notice that the market is moving upward like this. You notice that the market is moving upward in this direction. I hope you are seeing that. So now what you are going to do in order for you to get a better and a clearer view of the market, what you are going to do is that you are going to take your path 2, then starting from this point here, you draw here. So you notice that this is an impulsive move, and this is the retracement up to this point here, and this also an impulsive move, this also a retracement here, this also another impulsive move here, this also a retracement here, and this also another impulsive move up to this point here. So you notice that it's very, very simple to spot an uptrend market whenever you do it this way. So first of all, you have to zoom out your chart to make your chart look smaller, then take your part 2 to trace out the pattern in the market. That makes you get a clearer picture of the market, so you'll be able to know the market structure, which is an uptrend. We are taking a look at another example on the real chart. So now, like I said, whenever you open your chart, it's always going to look like this. So what you have to do first rule is to zoom out your chart this way to get a clearer picture of the market. So now you realize that when you do it this way, you can see the market structure clearly. You can see the trend of the market clearly. So you notice the market is moving upward up to this point here. So now what you're going to do again is to take your part 2, then start from this point here, then you notice the impulsive move here, then the retracement up to this point here, then another impulsive move here, then the retracement to this point here, then another impulsive move up to this point here. So you realize that you get a clearer picture of the market, and everything becomes simple for you to note the market structure or the trend of the market. So now in the next point, we'll be moving on to a downtrend market. I'm going to explain a downtrend market. Take my time to explain a downtrend market. Now guys, we'll move on to a downtrend market. So now, like I always say, think of the market moving in a wave-like form. We all know that the market doesn't move from one point to another point in this form. It always moves in a wave-like form. So now you notice that we have this impulsive move here. Now then we have this retracement move moving upward like this. Then we also have another impulsive move moving down. Now what you notice about the impulsive move is that the impulsive move always closes below this point here. It closes below this point here. So you notice something like this, then you see another retracement or correctional move to this point here, then another impulsive move which is always closing below this point here. So the impulsive move always closes below this point here, then another retracement, then the impulsive move. So this is how a simple downtrend looks like in the market. So we'll move on to look at real chart examples. Spoken a little bit about a downtrend market. Now, one of the characteristics you also have to know about a downtrend market is that it has series of lower highs and lower lows. So now, looking on my chart here, you see that I've denoted some points with the letters LH and LL. So now with the LH here, now this tip here is a lower high here. This tip here is a lower high here. This tip here is also a lower high here. This tip here is also a lower high here. So if you don't see a lower high, then that's not a downtrend. So now you notice that this tip here is also a lower low, which I've denoted with LL, and this tip here also is a lower low, which I've denoted with LL, and this tip is also a lower low. So this forms the basics of a downtrend market. And now one thing you should note about a downtrend market is that sellers are in control of the market, meaning that traders are selling that particular asset or currency pair. So what you have to do in a downtrend market is to look for selling opportunities. You should always sell in the market or go short in the market. You should never do anything other than selling. I hope you are getting it. So let's try to keep things basic and very, very simple. Now we are going to look at a real chart example on a downtrend. So now whenever you open your chart, this is how your chart is going to look. It's going to look like this or bigger than this, right? So now what you have to do, like we always do, is to zoom out our charts in order to get a clearer picture of the market trend. So now we zoom out our chart, you zoom it out, and now you realize that when you zoom it out, you're able to get a clearer or a bigger picture of the chart. So now you notice that the market is in a downtrend. Even without using your path tool, you are able to tell the trend of the market. So now you notice that price has this impulsive move here. Price has this impulsive move starting from this point here, then this retracement to this point here, then another impulsive move to this point here, and a retracement to this point here, then another impulsive move to this point here, then a retracement. You can see the retracement. So it's likely that price will continue with an impulsive move then in that order. So it's very, very simple, and you notice that they all have series of lower lows and lower highs. Since it's a downtrend, they all have series of lower lows and lower highs. Another example on a downtrend market. So our first rule here is to do what? To zoom out our chart so that we get a clearer picture. So once we zoom out our chart, you see that the chart becomes smaller and we are able to get the bigger picture or a clearer picture about the market. You notice that even without doing anything, once you zoom out your chart, you're able to tell the trend of the market. So in this scenario, notice that the market is in a downtrend here. So now taking our path to, we have this impulsive move here, right? Then we have this retracement up to this point here. Then we have this impulsive move to this point here. Then another retracement to this point here. Then an impulsive move to this point here. Then a retracement to this point here. Then another impulsive move. Then a retracement. So it's likely that price will continue with its downtrend in that order. So in our next point, we'll also look at a ranging market. Now that we've spoken about trending markets, which is the uptrend market and the downtrend market. Now, when the market is not trending, how does the market look like? And don't forget that I said always think of the market moving in a wave-like form. So now in this point, we look at a ranging market or a consolidating market. So now in this type of market, this when the market becomes neutral. Both buyers and sellers are in control. It's like an equal game. Everything is neutral. 50-50. 50% buyers, 50% sellers. So no one is in control of the market. And in such a market, what we do is that we don't trade in a ranging market. We don't trade in a ranging market until we know who is in control of the market. So now this is how a ranging market looks like. So now a ranging market looks like this. So you see the price moving upward to a point here. Then you see it coming down to a point here. Then
moving upward again. So this is how a ranging market looks like. So now one thing you notice about a ranging market is that it has equal highs and equal lows. It has equal highs and equal lows. So you notice that this high here and this high here, they are equal, and this low here and this low here, they are also equal. So this is how a ranging market looks like. This is how you should think of a ranging market. No one is in control of the market. There is no break-off structures, or there is no series of higher highs and higher lows, or lower lows and lower highs. So it's very, very simple. Always think of a ranging market in this way. You notice that in a ranging market, this high here with this high here, there's no impulsive move closing above this high here. With this high here also, there's no impulsive move closing above this high, and with this low here, there's no impulsive move closing below this low here, and with this low here, there's no impulsive move closing below this low here. So you notice that the lows are equal and the highs are equal. Move on to look at a ranging market in a real chart. So now, whenever you open your chart, this is how it's going to look like on TradingView. So like we always do, we tend to zoom out our chart so that we get a clearer picture of the market. So now when you zoom out your chart, it looks smaller like this. And now if you have to take your path through here, you notice that the market is ranging over here. The market is ranging at this point here. So you see the market ranging at this point here. So now you can zoom in your chart to continue with your analysis. So now you notice that this market is ranging. So moving on to another example here. What we have to do first is to do what? Zoom out our chart. So now when we zoom out our chart, we get a clearer picture of the market. And you notice that the market was ranging at this point over here. So the market started ranging from here. Then we saw this downward movement here, then here. Then we saw this. Then we saw this. So you notice that the market was ranging. And one thing you should notice that whenever you move on to a real chart, you are not going to get it nicely like how I drew it previously in the explanation. Most of the times they look irregular. You are not going to see them regular like that. They look irregular and they look kind of nasty. That's why I always encourage you guys to zoom out your chart so that you get a clearer picture. Else, if you don't zoom out your chart, you won't be able to get a clearer picture of the market. We also take another look over here. So now you have to do what? Zoom out your chart. When you zoom out your chart, what you're going to do is to take your path through here, then draw from this point to this point here, then draw to this point here, then draw to this point here, then draw to this point here, and draw to this point here, and draw to this point here. Now you notice that this is how a ranging market looks like. You realize that they have equal lows and equal highs. When you finish, you can zoom in your chart. You can just zoom in your chart to get to continue with your analysis. So it's very, very simple. Just let's try to keep things basic and very simple. So the trick here is to zoom out your chart in order for you to get a clearer picture of the current market structure. Now guys, we've come to an end of this lesson. Now if you find this video valuable, make sure you hit the like button, and if you have any question concerning the market structure, please do well to ask in the comment section below, and I'll do my best to answer all of your questions. And I'll also encourage all of you to practice, because forex trading demands a lot of practicing, and the more you practice, the better you become. Thank you.